I don't think any banks should be bailed out. The fact that banks are bailed out is the problem. We've set a precedent and created a moral hazard by bailing out banks. And because everybody expects a failed bank to be bailed out, the banks take a lot more risk than they would take in a world where they weren't going to be bailed out. I mean, why should we create a special privilege for banks? Why is it that if a bank is in trouble, it qualifies for a federal government bailout? I mean, where in the United States Constitution does it authorize the United States government to bail out failed banks? It doesn't. I mean, that's not a role of the U.S. government. I want bad banks to go out of business. And if bad banks were allowed to go out of business, fewer banks would be going out of business. Fewer banks would be bad because they would be forced to be responsible because their depositors would force them to be responsible. You see, when the depositors are sure that the government will bail out their bank, well, then they just give their money to any bank, whatever one is the closest to my house. That's where I'm going to put my money. Who gives a damn what they do with it? I don't care because it's all government guaranteed. But if everybody knew that the government wasn't guaranteeing your bank account, you wouldn't just put your life savings in a bank without doing a little research on that bank. And, you don't have to be, a financier yourself to pick a good bank. Just like, I go shopping for cars. I'm not an auto mechanic. I don't have any expertise in how cars work. I buy cell phones. I mean, I'm not an electrician. I mean, or an engineer. Or I don't need computer science. I don't know how any of this stuff works, right? I buy stuff all the time. I don't know how it works. So, but there are consumer reports out there. There's other ways I can do my research to try to figure out, what brand I trust, what I want to buy. The same thing would happen with banks. We had banks in this country before we had deposit insurance. We didn't get any deposit insurance at all until the Great Depression. So we managed to go from, 1789, whenever we signed the Constitution, to 1933 or 34 without any deposit insurance. We financed the Industrial Revolution without any deposit insurance. We had big banks, lots of people put money in banks. It all worked fine. And in fact, even during the Great Depression, with all the bank failures, only about 2% of the value of all the money on deposit in all those banks was lost. That wasn't that bad, considering that it was a Great Depression. The banks are much worse off now. They're far less stable than they were during the Great Depression because back then, the market was regulating the banks. Now you've got the government regulating the banks, and it's much worse regulation. And of course, you've got this moral hazard because people just put their money in any bank, and the banks know that people don't care what they do with their money, because it's all guaranteed by the government. So this is a mistake. The Swiss government, everybody thinks you can't let a bank fail. And the problem is because of the attitude that no bank can fail, that's why all these banks are so big. All these banks that were designated as too big to fail in 2008, well, they're all way bigger now. Maybe we should have let some of them fail. That we would have been better off instead of making them so much bigger. Now they're really too big to fail. But the thing is, they're too big to exist then, if they're too big to fail, because everything has to be able to fail. Because if you think a bank can't fail, then everybody wants to put their money there, right? If they've got this government guarantee, how are you supposed to compete with that? I start up a little bank. How am I going to compete with this huge bank that's too big to fail when my bank isn't too big to fail? So how do I compete? It's just because so many people are wrong, that's what allows it to continue for such a long period of time. The bubble gets bigger and bigger and bigger because nobody knows that it's a bubble, except the guys that are on the outside looking in saying it's a bubble, it's a bubble. But now the air is coming out and people don't understand it. I mean, and when COVID first hit, and I saw immediately the impact that was going to have because we were telling people not to work, and then we were printing more money. So we were producing less and printing more. That was a recipe for massive inflation, and now we're having to eat that. But still, the mainstream was worried about deflation. They're printing money like crazy, and nobody's working, and these fools are worried about prices going down. And now, we've been creating inflation for 20 years. We had interest rates at zero. We printed all this money. The Fed's balance sheet got to $9 trillion. Now we're going to have to live with decades of high inflation and potentially hyperinflation based on the way these policies are evolving, and make your investment. I mean, get out of the dollar. Get out of harm's way, and inflation proof your portfolio. It's not just crash proof this time. It's inflation proof.